National Bureau of Statistics is announcing new economic figures right now, including the GDP from the first half of the year. So let's listen into the briefing happening in Beijing.
Review on the Chinese economy in the first half of 2019 and answer your questions. Now I give the floor to Mr. Mao Shengyong. Thank you. Ladies and gentlemen, journalists, good morning. First of all, I will brief you on the economic performance in the first half of 2019, and then I will answer questions. In the first half of 2019, faced with complex environment both at home and abroad, under the strong leadership of the Central Committee of the CPC, with Comrade Xi Jinping as the core, all regions and departments strictly implemented the decisions made by the CPC Central Committee and the State Council, followed on the general working guideline of making progress while maintaining stability and the new development philosophy, pursued high-quality development, focused on the supply-side structural reform, deepened reform and opening up, and strengthened efforts on maintaining stability in employment, finance, foreign trade, foreign investment, domestic investment, and market expectation. As a result, the national economy performed within the reasonable range and sustained the momentum of progress in overall stability. GDP of China in the first half of 2019 was 45 trillion yuan, a year-on-year increase of 6.3% at comparable prices. For Q1, GDP growth was 6.4%, and for Q2, it was 6.2%. The value added of the primary industry was 2.3207 trillion yuan, a year-on-year growth of 3%. The second industry was 17.9984 trillion yuan, year-on-year growth of 5.8%, and the tertiary industry was 24.7743 trillion yuan, up by 7% year-on-year. First, agricultural production was sound with another bumper harvest for summer grain. In the first half of this year, the value added of crop farming grew by 3.9% year-on-year, 0.5 percentage points slower than the first quarter. The overall output of summer grain was 141.74 million tons, an increase of 2.93 million tons over last year, or 2.1%, hitting the highest record of 2017. The structure of crop farming was further optimized as planting area for cotton and soybean increased. The output of eggs grew by 3.6% year-on-year, and that of milk grew by 1.7%. The output of pork, beef, mutton, and poultry was 39.11 million tons, down by 2.1%, among which the output of beef and mutton and poultry grew by 2.4%, 1.5%, and 5.6% year-on-year respectively, while the output of pork went down by 5.5%. Second, industrial production was generally stable, with high-tech manufacturing taking a larger share. In the first half, the year-on-year growth of total value added of the industrial enterprises above the designated size was 6.0%, 0.5 percentage point slower than first quarter. In June, the year-on-year growth was 6.3%, 1.3 percentage points faster than that of May, up by 0.68% month-on-month. The value added of state-holding enterprises was up by 5.5% year-on-year, shareholding enterprises up by 7.3%, and enterprises funded by foreign investors or investors from Hong Kong, Macau, and Taiwan up by 1.4%. Value added of the mining grew by 3.5%, manufacturing up by 6.4%, and production and supply of electricity, thermal power, gas, and water grew by 7.3%. Strategic emerging industries up by 7.7%, 1.7 percentage points faster than that of the industrial enterprises above the designated size. High-tech manufacturing up by 9%, 3 percentage points faster than that of the industrial enterprises above the designated size, accounting for 13.8% of the total value added of such enterprises, 0.8 percentage point faster than that of the same period last year. The output of new energy vehicles and solar cells grew by 34.9% 20.6% and 20.1% year-on-year. In the first 5 months, the total profit made by industrial enterprises above the designated size was 2.379 trillion yuan, down by 2.3%, 1.1 percentage points less than that of the first 4 months. And the profit of in May grew by 1.1%, while that for April it was down by 3.7% year-on-year. The profit rate of the business revenue of industrial enterprises above the designated size was 5.72%, 0.2 percentage points higher than that of the first 4 months in 2019. Third, service sector grew faster, with modern services industries performing well. In the first half, the service sector maintained a good momentum. The value added of information transmission, software and information technology services, that of leasing and business services, that of transport, storage and postal services, and that of financial intermediation grew by 20.6%, 7.8%, 7.3% and 7.3% year-on-year respectively, or 13.3 percentage points, 0.8 percentage point, 0.3 percentage point and 0.3 percentage points faster than overall tertiary industry. The index of services production increased by 7.3%, 0.1 percentage point lower than that of the first quarter. Especially the figure for June was up by 7.1%, 0.1 percentage point faster than that of May. In June, the business activity index for services was 53.4%, continuing to stay above the 50-point mark, and business activities expectation index for services was 16.3%, a very high level. In the first 5 months, the business revenue of service enterprises above the designated size increased by 10.1%, 0.3 percentage points faster than that of the first 4 months. Strategic emerging services, high-tech services and technology services demonstrated fast growth, which increased by 12.5%, 12.3% and 12% respectively, or 2.4 percentage points, 2.2 percentage points and 1.9 percentage points faster than the growth of the service enterprises above the designated size. 4. Market sales demonstrated a stable and rising trend, while higher growth rate and share for online retail sales. The total retail sales of consumer goods reached 19.521 trillion yuan, up by 8.4%, or 0.1 percentage point faster than that of Q1. In June, retail sales of consumer goods reached 3.3878 trillion yuan, up by 9.8%, or 1.2 percentage points faster than the previous month, or up by 0.96% month-on-month. In the first half, the urban retail sales stood at 16.6923 trillion yuan, up by 8.3% year-on-year, and rural retail sales 2.8286 trillion yuan, up by 9.1%. The income of catering was 2.1279 trillion yuan, up by 9.4%, and the retail sales of goods were 17.393 trillion yuan, up by 8.3%. Upgraded consumer goods grew fast. The retail sales of enterprises above the designated size of cosmetics grew by 13.2% year-on-year, 4.8 percentage points faster than the total retail sales of consumer goods. The online retail sales reached 4.8161 trillion yuan, up by 17.8%, or 2.5 percentage points faster than the first quarter. The online sales of physical goods were 3.8165 trillion yuan, up by 21.6%, accounting for 19.6% of the total retail sales of consumer goods, or 1.4 percentage points higher than that of Q1. Fifth, investment grew steadily, and investment in high-tech industries grew fast. In the first half, fixed assets investment stood at 29.91 trillion yuan, up by 5.8% year-on-year, 0.2 percentage point faster than that of the first 5 months, or 0.5 percentage point slower than that of the first quarter. The private investment reached 18 trillion yuan, up by 5.7%. Investment in the primary industry went down by 0.6%, secondary industry up by 2.9%, among which investment in manufacturing went up by 3%. The tertiary industry went up by 7.4%, among which that in infrastructure was up by 4.1%. Investment in high-tech manufacturing industry increased by 10.4%, 4.6 percentage points faster than the total investment. Investment in high-tech services went up by 13.5%, 7.7 percentage points faster than total investment. In June, fixed asset investment was up by 0.4% month-on-month. In the first half, the total investment in real estate development was over 6 trillion, up by 10.9% or 0.9 percentage points lower than the first quarter. The floor space of commercial buildings sold reached 757.86 million square meters, down by 1.8%. The total sales of commercial buildings was over 7 trillion yuan, up by 5.6%, maintaining the same speed as that of the first quarter.
Sixth, imports and exports showed slight growth and the trade structure continued to improve. In the first half, the total... 8. Employment was generally stable and the number of rural migrant workers continued to increase. In the first half, the new jobs in urban areas totaled 7.37 million, accounting for 67% of the whole year target. In June, the urban surveyed unemployment rate was 5.1%, 0.1 percentage point higher than last month. And the rate for 25 to 59-year-old people was 4.6%, 0.5 percentage point lower than that of the surveyed unemployment rate in urban areas. The rate in 31 major cities was 5%, same as previous month. In June, the employees of enterprises worked averagely 45.7 hours per week. At the end of the second quarter, the number of rural migrant workers reached 182.48 million, an increase of 2.26 million over the same period last year, up by 1.3% and 0.1 percentage point faster than the first quarter. 9. Residents' income grew faster than economic growth, and urban-rural income ratio continued to narrow down. In the first half, the nationwide per capita disposable income was 15,294 yuan, a nominal growth of 88.8% year-on-year, 0.1 percentage point faster than first quarter. The real increase was 6.5% after deducting price factors, 0.2 percentage points higher than GDP. In terms of permanent residents, the urban disposable income was 21,342 yuan, a real growth of 5.7%. The rural disposable income was 7,778 yuan, a real growth of 6.6%. The urban disposable income was 2.74 times of the rural ones, 0.03 less than the same period last year. The median of the nationwide per capita disposable income was 13,281 yuan, a nominal increase of 9% year-on-year. 10. Supply-side structural reform was further advanced and economic structure continued to optimize. Gains were consolidated in the work of 5 priority tasks. In the second quarter, the capacity utilization rate nationwide was 76.4%, 0.5 percentage point higher than the first quarter, 1 percentage point higher than the average rate since 2013. Utilization rate of manufacture of non-metallic mineral products, smelter and pressing of ferrous metals and non-ferrous metals was 3.4 percentage points, 1.7 percentage points, and 1.7 percentage points higher than first quarter. At the end of June, the floor space of commercial buildings for sale reached 501 million square meters, a drop of 7.66 million square meters compared with the end of previous month, and down by 8.9% over the same period last year. At the end of May, the asset liability ratio of large industrial enterprises was 56.8%, 0.6 percentage points lower than the same period last year. In the first half, investment in weak areas such as ecological protection, treatment of pollution, and education increased by 48% and 18.9% respectively, or 42.2 percentage points and 30.1 percentage points faster than total investment. Efforts for further progress was made in three critical battles. The balance of local government debt was 19.895 billion yuan within limit approved by NPC. The targeted poverty alleviation was more effective, and according to preliminary assets, in the first half, the share of clean energy consumption such as natural gas, hydropower, nuclear power, and wind power in total energy consumption in the first half was 1.6 percentage points higher than that of the same period last year. Energy consumption per unit GDP went down by 2.7% year-on-year. The economic structure continued to improve. In the first half, the value added of tertiary industry accounted for 54.9% of GDP, a year-on-year increase of 0.5 percentage point, 15 percentage points higher than the second industry, contributing 60.3% to GDP, 23.2 percentage points higher than the secondary industry. The large strategic emerging industries and high-tech industries maintained fast growth. The final consumption expenditure contributed 6.1% to GDP growth. Service consumption took up 49.4% of households' final consumption expenditure, 0.6 percentage point higher than the same period last year. Well, we have seen steady progress was made on key regional strategies such as coordinated development of Beijing-Tianjin-Hebei region, Yangtze River Economic Belt, and Guangdong-Hong Kong-Macau Greater Bay Area, and integrated development of Yangtze River. We are seeing interconnected development across the country. Generally speaking, the national economy in the first quarter performed within the reasonable range with overall stability and progress. However, we should also be aware that economic conditions are still severe both at home and abroad, with slowing global growth and trade, growing external instabilities and uncertainties. Prominent issues of unbalanced and inadequate development and new downward pressure on economy at home. Going forward, guided by the Xi Jinping thought on socialism with Chinese characteristics for a new era, we will fully implement the decisions made by the CPC Central Committee and the State Council, follow the general working guideline of making progress while maintaining stability, focus on supply-side structural reform, pursue high-quality development, deepen reform and open up, improve business environment, strengthen innovation in key areas, keep all parties fully motivated, ensure stable employment, a stable financial sector, stable foreign trade, foreign investment, domestic investment and expenditure, and work to boost the state.
So a lot of numbers there spilling out of the National Bureau of Statistics, but analysts, markets, corporations, government leaders all over the world are closely watching these figures to get a better gauge of China's economy among fears that the global economy may be showing signs of weakening. The big number, China's gross domestic product growth for the second quarter of this year, that's April to June, 6.2%. It is still growing. It is still within government targets, but that is the slowest pace in 30 years for China. So let's get some reaction here with our guest here in the studio, Professor Liu Baocheng from the University of International Business and Economics. 6.2% GDP growth. What's your take on that number?
Well, actually, on the average, is 6.3, as reported by Mr. Mao. Well, it is still within a very reasonable corridor because the target was set between 6 to 6.5% for this year's growth rate. So now it is precisely within that range. But the worry is that the PMI still dropped in the contraction range. So that's something that indicates that businesses do not see a lot of prospect ahead, despite of the fact that many of those high technologies are taking a larger share of the economic growth rate. And in the meantime, the service is taking a larger share. So I'm really concerned is that how much of the money is going to be injected into the real economy, and support smaller businesses. So it's still as Mr. Mo pointed out, it's still the imbalance of the supply side that are really distorting the economy. And now the bigger investments in larger areas and also mega investment by local governments are being contained in order to balance between the aggressive growth rate versus the quality of those projects and versus also the debt ratio of those state-owned firms and local governments. So it's a very comprehensive map that is being rolled out. It's not really the growth rate that really matters a lot, but it's really the quality of the growth of the entire economy and the balance that really matters.
Well, let's talk about some of those measures China has undertaken to improve the economy. We've seen massive tax cuts, we've seen easing restrictions for foreign investment. Would you call them effective?
Well, I think now the most effective way is to inject a large amount of liquidity into the market, but there are also side effects. You really are really stimulating inflation, and if the economy doesn't really move aggressively, you really experience a tougher situation of stagflation. So yes, to enlarge the money supply and also to reduce the cost of money by maintaining a lower interest rate and pushing the banks to further offer loans to agriculture, to smaller businesses that are supporting the Chinese employment, which are good enough. And then, lower tax, of course, to reduce the burden. But the impact is really selectively. It's spread unevenly among different types of businesses. For example, service sectors may benefit more, and manufacturing sectors who has, say, shorter supply chain may not really benefit a great deal. And then, the foreign investment law is there, okay, to serve as the major driver for continued inflow of foreign investment to China. But in the meantime, we also have aggressive outflow of investment, particularly over the Belt and Road program. They may strike a balance. And the momentum is still there, but the growth rate is not really dramatic yet. In order to continuously to bring more global investment to China, we need not only to rely on the investment law, but continue to improve the entire investment environment and business environment, not only for foreign businesses, but for the entire market players, including state-owned firms and private firms.
All right, Professor Liu Baocheng from the University of International Business and Economics. Thanks for your time today. And we'll have much more coverage in the coming hours here on CGTN of China's latest economic numbers. And of course, you can find the latest online at cgtn.com. But we have other news to get to here on The World Today after this break.